Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about what New York Community Bankcorp can teach public company executives. And it starts with this fundamental premise that there is a driver or fundamental reason behind the ownership of any given publicly traded stock. In the case of regional banks, it has to do with dividend payments. And this is the important premise. If you make a surprise change to your dividend policy, you can expect a greater than 50% decline in your stock and likely churn your entire shareholder base in a week. So what happened with New York Community Bankcorp? Investors owned the stock for the dividend payment. At the fourth quarter, they announced an asset impairment charge that led to a $500 million swing between expected profit and actual profit that led to a cut of the dividend to a nickel. The dividend cut was completely unexpected, and the entire shareholder base churned in 1 week. And this is what's most important. If a public company management team breaks an investor mandate, it is nearly impossible to stop the cascade of selling that will result in those shares. And so there's 4 key implications for public company management teams from this situation. First, your golden metrics. You need to know the fundamental golden metrics and reasons why investors own your shares, and don't mess with those metrics. Number 2, dividend policy and other policies are very powerful. If you give abrupt or unexpected changes to these policies, you will drive a greater than 50% decline in your stock price and likely churn your shareholder base in a week. And part of that is for reason number 3. If you do not communicate ahead of time the possibility of change around these tent pole policies, you are going to further destroy your stock and your credibility. Number 4, too much negativity can be a problem as well. In this case, you had an asset impairment charge and a dividend policy change. It was too much to save the shareholder base, and any sort of liquidity discussion or management change was not going to help the situation. The bottom line is you need to be relentlessly communicating your story and any possibility of major change well in advance of that change. Otherwise, you're going to face a 50% share price decline and a churn of your entire investor base in a week. Always here to help you with your capital markets, investor relations, and corporate finance needs. Thanks for watching.